in order to record increase or decrease in the value of assets and liability, and after recording increase or decrease in the value of assets and liability, so it will be either revaluation profit or revaluation loss. If any asset value have increased and liability value have decreased, you are going to record in the credit side. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. Today we are in the 6th session of chapter 3, that is admission of a partner, and this is from part A of your accountancy syllabus. So your chapter 3 is all about admission of a partner. So under reconstitution of a partnership firm, you are going to learn about admission of a partner first, then retirement of a partner and death of a partner. So your third chapter is all about admission of a partner, and my dear students, we were discussing about 12 marks problem on admission of a partner. In today's session, we shall continue with one more problem, that is a 12 marks problem. Let us see a few new adjustments on admission of a partner. Now go through the problem here. Anil and Arun. So Anil and Arun are partners in a firm sharing profit and loss in the ratio 6:4. Now they have given who are the two partners here, Anil and Arun. What is their profit sharing ratio? 6:4. So here 6:4 can be written in the form of fraction as 6/10 and 4/10. Their balance sheet as on 31st March 2017 was as follows. So here in the question, they will give the balance sheet before the admission of a new partner. So here also a new partner has been admitted. Let us see later. But here there are two partners, Anil and Arun, who are old partners, and they have given the balance sheet of these two partners. So balance sheet as on 31st March 2017. So they have given certain liabilities as well as certain assets. Now let us see what are the assets they have given in the balance sheet. That is the old balance sheet. Cash at bank 17,000, bills receivable 19,000, stock they have given 80,000, building how much? 60,000, and debtors 1,20,000 less PDD, that is provision for doubtful debts, 6,000. So the total is 1,14,000. Now coming to the liability side also, here they have given creditors 1 lakh, general reserve 32,000, as well as bank overdraft 8,000, and they have given the capital of Anil and Arun. That is the old capital of Anil and Arun 70,000 and 80,000. So the total is 1,50,000, and the total of liability as well as asset is 2,90,000. So this is the balance sheet before the admission of a new partner. Now let us see who is the new partner who is being admitted into the partnership firm. That is, on 1/4/2017, they admit Bhuvan. Now, Bhuvan is a new partner. Who are the old partners? Anil and Arun. Now, who is a new partner? Bhuvan is entered into partnership for 1/5 share. Now, here Bhuvan is being admitted for 1/5 share in the future profit on the following terms. Let us see what are the conditions they have given. So the first condition is that Bhuvan brings in cash rupees 50,000 as his capital and 40,000 towards goodwill, and half of the goodwill amount withdrawn by the old partners. Now, when a new partner Bhuvan enters into a partnership firm, as I told you, he will bring capital. Along with that, some extra amount will be bought by the new partner in order to compensate the old partner. So that amount is called as what? Goodwill or premium for goodwill. Here also, Bhuvan has bought 50,000 as cash in the form of capital and 40,000 towards goodwill. One more new adjustment is that half of the goodwill amount withdrawn by the old partners. Now here you have to remember, so this is a new adjustment. We have not solved a problem on this adjustment before. So here, of course, the goodwill is bought by the new partner, right? How much? 40,000. Here, half of the 40,000, that is 20,000, has been withdrawn by whom? By the old partners. So either they can retain in the business. So in the previous problem, they have not given any information. So we have assumed that they have retained in the business itself. But here what they have told, they have directly told that, so half of the goodwill amount, so among 40,000, 20,000 has been withdrawn by the old partner, that is Anil and Arun. Next one is reduce stock by 10% and increase building to 69,000. Now reduce stock in the sense what? Decrease in asset. So here the asset have decreased, that is stock have decreased by 10% and increase building. So here the value of building have increased. It's nothing but what? Increase in asset. Next one is provision for doubtful debts decreased by rupees 2,000. Now what is provision for doubtful debts? It's a liability, right? So it is a liability. Now they have told it has been decreased by rupees 2,000. In the sense liability have decreased. And the next one, what they have told, prepare evaluation account, partners capital account and new balance sheet of the new firm. So this is a adjustment. Hope you are clear with the adjustment here, and always remember, so these adjustments should come twice in your solution, whereas in your balance sheet all the items should come at least once in your solution. So whenever after preparing the account, so if any or some amount is missing, you can go through the adjustment and you can see which of the item is missing. So this is about the question. Now always you remember, so increase or decrease in the value of assets and liabilities. So where do we record? In the revaluation account. Now we shall directly go through the solution. So first account to be prepared is revaluation account. So what is the main intention of preparing revaluation account? In order to record increase or decrease in the value of assets and liability, and after recording increase or decrease in the value of assets and liability, so it will be either revaluation profit or revaluation loss. So that revaluation profit or loss has to be distributed among the partners, that to only old partners. In which ratio? Old ratio. So here they have given old ratio is 6:4. Now go through the solution here. Write a neat heading here, revaluation account. So we'll be having debit as well as credit side. Under debit side particulars amount, credit side particulars and amount. Now what you are going to record in your debit side? So as I told you, I have given a clue. Always remember this, A minus L plus. In the same way, credit side A plus L minus. Okay, so what do you mean by A minus L plus? If any asset value have decreased and liability value have increased, you are going to record in the debit side. Whereas coming to the credit side, if any asset value have increased and liability value have decreased, you are going to record in the credit side. Now where do we get this information? In the adjustment. Now go through the adjustment here. So leave about the first adjustment, that is relating to capital as well as goodwill. Now come to the second one. Reduce stock by 10% and increase building to 69,000. So reduce stock in the sense what? As I told you, decrease in asset. To what extent? 10%. So where do we record decrease in asset? That is, so where do we record decrease in asset? In the debit side, A minus. So to stock account. Now go through the balance sheet. Let us see what is the value of stock. So here stock is decreased by how much? 10%. So we have to calculate that, right? That is depreciation. Now go through the value of stock. So stock value is 80,000. 80,000 into 10%. That is 10%. Where do we get? That is here. That is stock decreased by 10%. So 80,000 into 10 divided by 100. So we'll get 8,000. Moving on to the next one, increase building to rupees 69,000. So as I told you, always remember this to as well as by. So suppose it is by, so you will take whole amount in the revaluation account. But so what they have told, the current value of building is 69,000. But earlier how much it was? It was only 60,000. So what does it mean? So now it has increased by how much? Rupees 9,000. So it is been increased by rupees 9,000. Now which amount we have to take in the revaluation account? Not 69,000, not even 60,000. So we have to take 9,000. To what extent it has increased? So that amount will take in a revaluation account. So increase in the value of building, that is increase in asset. So where do we record in your revaluation account? That is in the credit side. So how to record? By building account, current value is 69,000 minus earlier value is 60,000. So the difference is 9,000. In the sense, to what extent it has increased? It has increased by rupees 9,000. Now moving on to the next adjustment. Provision for doubtful debt decreased by rupees 2000. Now we have to take this whole 2000. Okay, so provision for doubtful debt decreased by rupees 2000. In the sense what? Decrease in liability. As I have already told you, whatever which is deducted from debtors, so it is treated as liability. So decrease in liability to what extent? By 2000. So by provision for doubtful debts, you can write directly 2000 because they have directly given in the question, it has been decreased by rupees 2000. Okay, now we are done with the revaluation account. As usual, we have to balance both the side and the balancing figure will be either revaluation profit or revaluation loss. And it will be transferred to partners capital account, that to old partners capital account. In which ratio? Old ratio. So here old ratio is 6:4. Now add the amount in the debit side. So here it is only 8,000. Whereas coming to the credit side, 9,000 plus 2,000. So here it is 11,000. So 11,000 is more. Write 11,000 both the side minus 8,000. So the balancing figure is how much? 3,000. So your credit side is more than debit side. It means what? Revaluation profit. So transfer to profit transferred to partners capital account. So who are the partner? Anil and Arun. So what is the profit? 3,000. 3,000 into what is the ratio? 6:4. So 6 divided by 10 you will get 1,800. In the same way for Arun, 3,000 into 4 divided by 10 you will get 1,200. And the total of both the side is 11,000. Now moving on to the next account, that is partners capital account. So here, as you know the format of partners capital account, you will be having debit as well as credit side. Under debit side particulars, and you have to draw column for each partner including new partner also. So who are the partners? Old partner Anil and Arun, and new partner is Bhuvan. In the same way in credit side also particulars Anil, Arun and Bhuvan. Now, the first thing what you have to transfer in your partners capital account is that, so you have to transfer the capital of old partners. So, how to transfer? Transfer it as by balance brought down. Now, where do we get the old partners capital? In the balance sheet. Now, see the balance sheet, they have given the capital of old partners 70,000 as well as 80,000. You have to take that capital to partners capital account as by balance brought down. So, by balance brought down, so what it is? Capital of partner. How much? 70,000 and 80,000. Next, your second item to be transferred is revaluation account balance. So, you have already prepared the revaluation account, and after that the balancing figure will be revaluation profit or revaluation loss. So, in this problem it is revaluation profit, right? So, you have to transfer this profit to partners capital account. So, how do we transfer? By revaluation account. So, by revaluation account, so this is profit. So, what is the profit? So, we have already calculated, that is 1,800 and 1,200. So, 1,800, 1,200. So, this is about revaluation account profit. And the next item you have to record is that you have to check your balance sheet that is given in the question, whether there is any reserve, fund as well as profit and loss account. Now, if you see the balance sheet, let us see whether there is any reserve, fund and profit and loss account. So, here there is general reserve. In the same way, if you see the asset side, there is nothing. That is, there is no reserve, there is no fund, there is no profit and loss account. So, as I have already told you, sometimes the profit and loss account will be in the asset side also. So, be careful. So, when you are seeing these three items, see in the asset side also. So, there will be profit and loss account sometimes. Now, here we have only one item, that is general reserve 32,000. So, this 32,000 has to be distributed among the old partners in old ratio. Now, why it has to be distributed only to the old partners? Because that reserve belongs to old partners only. So, how do we record? By general reserve. You have to record in the credit side of partners capital account. So, by general reserve 32,000 into 6:4. So, when you divide, you will get 19,200 and 12,800. Now, how to divide? So, here 32,000 into 6 divided by 10. In the same way, for the other one, 32,000 into 4 divided by 10. So, this is their ratio 6:4. 4, right? So you'll get 19,200 and 12,800. Now we are done with all the adjustment relating to the old partners. So we have transferred their capital, we have transferred revaluation account balance, and also we have checked whether there is any reserve fund as well as profit and loss account, and we have transferred. Now what you have to do? Come to the new partner. So what did the new partner bring? So new partner have bought capital as well as goodwill. So we have to take that capital as well as goodwill and record in partner's capital account in the column of new partner. Now how to take? So we have to take it as by bank account, and be careful whether we have to write it as by bank or by cash. Now if you see the balance sheet, what they have given, cash at bank they have given. Then we will take by bank account. So by bank account, so what is the capital which is bought by the new partner? It is 50,000 and 40,000 in the form of goodwill. So add these two and write in the new partner's column, that is 90,000. So this is relating to the capital as well as goodwill which is bought by the new partner. Now we have to record transaction for goodwill, that is treatment of goodwill as per Accounting Standard 26. So accounting standard 26. So as I have already discussed with you, so what is the entry? That is new partners capital account data to old partners capital account. So this is the entry, new partners capital account data to old partners capital account. Now who is a new partner here? New partner is Bhuvan. So write by Bhuvan's capital account, and the rest of the entry, that is the part of that entry, is to old partners capital account. So who are the old partner? To Anil's capital account, to Arun's capital account. So your entry will be new partners capital account data to old partners capital account. Now what you have to do? You have to distribute this amount, that is the amount which is bought in the form of goodwill. So what is the amount? 40,000 into 6:4. So this has to be divided in sacrifice ratio, but in the question they have not given the sacrifice ratio. They have just given the old ratio. So old ratio itself is considered as sacrifice ratio. So divide this 40,000. So 40,000 into 6:4. So how much each partner will get? 24,000 and 16,000, and make sure that you will write amount in old partners column, that is Anil as well as Arun. So here 24,000 in the column of Anil and 16,000 in the column of Arun. And the reverse entry is that is the part of the entry to old partners capital account, same amount. So here Bhuvan has to give 24,000 to Anil and 16,000 to Arun. So we'll write these two amount in Bhuvan's column. Now we are done with treatment of goodwill, that is according to Accounting Standard 26, when goodwill is bought by the new partner and it is been distributed among the old partners. And part of the question is that, so here half of the goodwill amount withdrawn by the old partners. So as I have already told you, 40,000 is bought by the new partner, but 20,000 they have withdrawn, right? So what is the entry then? To bank account, that is for withdrawing of goodwill. So to bank account, now half of 40,000 is how much? 20,000. So distribute that 20,000 in 6:4 ratio. So how much each partner will withdraw? That is 12,000 as well as 8,000. Or you can directly take the half of these two. So 24,000. Half of that is 12,000. In the same way, 16,000, half of that is 8,000. That is, half of the goodwill is withdrawn. So what is the entry? That is partners capital account data to bank account. So here Anil's capital account data, Arun's capital account data to bank account. So half of the goodwill is withdrawn. Now we are done with all the entries relating to partners capital account. So we have to balance both the side, and the balancing figure has to be carried down, because this business is going to continue in the future, right? So we have to carry down the balance. Now, if you add Anil's column, so here it is how much? Only 12,000 in the debit side. Whereas coming to the credit side, so here we are having 70,000 plus 1,800 plus 19,200 plus 24,000. So the total is 1,15,000. Now 1,15,000 is more than 12,000. So write 1,15,000 both the side minus 12,000. So you'll get a balancing figure of 1,03,000. In the same way, calculate that of Arun. So here in the debit side, it is only 8,000. Whereas coming to the credit side, so we are having 80,000 plus 1,200 plus 12,800 plus 16,000. So the total is 1,10,000. Right, 1,10,000 both the side because it is more minus 8,000. So you'll get a balancing figure of 1,02,000. In the same way, go on here. So here 24,000 plus 16,000, so it is 40,000 in the debit side, whereas coming to the credit side, so it is 90,000. So 90,000 is more, right? 90,000 both the side minus 40,000. So the balancing figure is 50,000. So this balancing figure has to be carried down. That is carried down to the balance sheet. So whatever the amount you have carried down, write it as brought down here. So by balance brought down, it is 1,03,000, 1,02,000 as well as 50,000. So this is how you are going to prepare your partner's capital account. Now we shall prepare the bank account. So as I told you, it's not compulsory to prepare the bank account, but make sure that if you prepare, it will be easy if you prepare the balance sheet. And it is a simple account also. Now, how to begin your bank account? Write the heading bank account. So, you'll be having debit as well as credit side. Under debit side, particulars, amount. Under credit side also, particulars as well as amount. Now, both debit and credit side. So, you'll be having particulars, amount, particulars, amount. Now, how to begin your bank account? So, if you see the balance sheet, there we had a bank balance, that is cash at bank. So, go through the balance sheet. So here we are having cash at bank rupees 17,000. Now this 17,000 has to be taken to bank account. So how to take? To balance brought down. How much? 17,000. So to balance brought down 17,000. Next we have to record the capital as well as goodwill which is bought by the new partner so that the bank balance of the organization increases. Right? So we had recorded an entry here by bank account. So how do we record? To Bhuvan's capital account. How much? 90,000. To Bhuvan's capital account 90,000. Again, half of the goodwill has been withdrawn so that the cash balance or the bank balance in the organization decreases. So we have recorded it as to bank account. Then how do we record? By Anil's capital account, by Arun's capital account. How much? 12,000 and 8,000. So by Anil's capital account 12,000, by Arun's capital account 8,000. Now we are done with bank account, balance both the side and the balancing figure has to be carried down and it has to be recorded in the balance sheet. Now if you total both the side, in the debit side it is 1,07,000 but in the credit side there is a shortage of 87,000. Now what is that 87,000? So it is a balancing figure that has to be carried down. So by balance carried down 87,000. Same way here you have to write to balance brought down 87,000. So this is about bank account. Now we shall prepare the last statement that is to be prepared is balance sheet. So balance sheet as on 1/4/2017, that is on the day a new partner has been admitted into the partnership firm. When? 1/4/2017. Now in order to prepare the balance sheet, so what you have to do? You know the format, you will be having liabilities, amount, asset as well as amount. Now what you have to do here? You have to refer your question, that is the balance sheet which is given in the question and write one by one. Same items, if there is any fluctuation, you have to make changes. Other than you have to go in that order only. Now, which is the first item we shall see in the balance sheet? That is cash at bank. How much? 17,000. But a new partner has bought capital as well as goodwill. So the bank balance increases. At the same time, some amount, that is half of the amount of goodwill has been withdrawn. So the bank balance have decreased. So these variations have to be made in the balance sheet. That is add as well as less. Now cash at bank in the balance sheet is 17,000. So we have to add capital 50,000 plus goodwill 40,000 minus 20,000. That is half of the goodwill is been withdrawn. So we shall see how we have recorded. That is cash at bank 17,000 which is given in the balance sheet plus 50,000 is a capital, 40,000 is a goodwill which is bought by the new partner minus the goodwill which is withdrawn. So the goodwill withdrawn 12,000 minus 8,000. So the total is how much? 20,000. That is half of the goodwill has been withdrawn. So when you total, you will get 87,000. So as I told you, if you prepare your bank account, so the balancing figure itself is the balance of bank account. It is 87,000. And the next one we shall see, bills receivable 19,000, but there is no adjustment relating to bills receivable. It means that bills receivable remains same. How much? 19,000. So bills receivable 19,000. So here it has to be recorded. How much? 19,000. And the next one is, so the next item is stock 80,000. Let's see any adjustment relating to stock. Yes, it is been reduced by 10%. In the sense 10% depreciation. So we have to deduct that. So how to record? Stock 80,000 less 10% depreciation. We have already calculated and recorded in revaluation account once. Now we have to deduct that. So the current value is 72,000. In the same way, next item. So next item is building 60,000. Let us see. Yes, building has been, now it has been increased to 69,000. In the sense, to what extent it has increased? By 9,000. So what is that 9,000? It's a appreciation. So this 9,000 is what? It is a appreciation. So we have to add that appreciation. So how to record? Building 60,000, add appreciation 9,000. So the total is 69,000. And the next one is debtors 1,20,000 less PDD 6,000. Again, they have given in adjustment, it has been decreased by 2,000. In the sense, earlier PDD was 6,000. Now it has been decreased by 2,000. In the sense what? Current PDD is how much? Only 4,000. So debtors is how much? 1,20,000 minus 4,000. So how to record? Debtors 1,20,000. Earlier it was 6,000. And it is been reduced by 2,000. So the current value is 4,000. So when we deduct that, we will get 1,16,000. So this is about your asset side. Now coming to the liability side of your balance sheet, let us see what are the liabilities. So we are done with all the assets, liabilities, creditors. But there is no adjustment relating to creditors. It means that creditors remains same. That is 1 lakh. In the same way, bank overdraft also. So we have not come across any adjustment relating to bank overdraft. So it remains same 8,000. So we shall record these two items, creditors as well as bank overdraft. But you are not going to record this general reserve in your balance sheet because that general reserve we have already distributed in partners capital account. So take creditors as well as bank overdraft. Creditors 1 lakh, bank overdraft 8,000. Next, so we are not going to record general reserve. Next we have to record the capital. But we are not going to record this capital because we have already taken once in a partners capital account. Then which capital to be taken? That is the balancing figure of partners capital account. So whatever the amount we have carried down, so that amount has to be taken as what? Capital. So capital, who are the partners? Anil, Arun as well as Bhuvan. What is the balancing figure here? That is 1,03,000, 1,02,000 and 50,000. So this balancing figure has to be taken as capital in balance sheet. So 1,03,000, 1,02,000 and 50,000. So total, and write in the outer column 2,55,000. Now we are done with all the adjustments as well as entries in the balance sheet. Now we have to total both the side, and the total of liability side is 3,63,000 and the asset side is also 3,63,000. So now we are done with the balance sheet, and the total of assets should be equal to total of liabilities. So in my next session, I am going to continue with one more problem on admission of a partner. So my dear students, see you all in my next session with a new problem, with a new adjustment. Till then, take care. Thank you.